Well, time to get back to our special segment then, Quarter Se Quarter Tak, where we bring you the earnings expectations from each sector. Today, the focus is on the chemical space. Sonal joins us to tell us what we expect from there. Over to you, Sonal.
Thank you so much for that. The big question for the chemical sector is, when will we see recovery? This time around, it's going to be a mixed quarter for this sector. Raw material prices have stabilized for most companies in Q1, but Red Sea issues, they are driving freight rates higher, leading to better prices for some chemicals. And the lead time for both raw material sourcing and supplies of finished goods has increased significantly. While the commentary from management suggests prices have bottomed out, but a meaningful recovery would only be seen in second half of FY25. Let's take a look at some of the names. SRF will continue to see decline in PAT both on a quarter-on-quarter and on a YOY basis. The chemical segment will see some weakness, but packaging could see some improvement. For Navin Fluorine, it would be a decent quarter YOY, but CDMO will continue to be under pressure with prices for R22 lower. Aarti Industries will see profits rising 60% YOY on a low base because discretionary demand was very low last year. Let's talk about agrochemicals now. International agrochemical market remains under pressure from Chinese oversupply and pricing pressure. And that's why UPL will continue to report a loss. While the volumes will pick up, this will be led by lower pricing. For PI Industries, growth will continue, though growth rates will come down. New products, excluding pyroxasulfone, may have been relatively subdued this quarter. The valuations will come up for you on the screen. Though we have seen substantial correction in pricing in stock prices as well, they still remain at elevated levels, somewhere between 29 to 30 times, barring UPL, which is one of the cheapest agrochemical stock and one of the biggest companies in the agrochemical space. But yes, this is what the valuation picture looks like here.
Okay, thanks a lot for that. Discuss more on the Q1 expectations from the chemical space. Bhawana Israni, the research analyst at Anand Rathi Institutional Equities, is joining us. Bhawana, hi, good morning and thanks for joining in. You heard Sonal out on the expectations from the sector. Just wanted your thoughts on the chemical space. What are the 2 or 3 things you're watching out for and which are the stocks that you're most bullish on now?
Yeah, hi, good morning and thanks for having me on the channel. Yeah, so as Sonal said, so Q1 FY24 last year, the performance was majorly impacted due to the destocking situation and aggressive supplies from China, which overall negatively impacted the volumes and prices both in the domestic and export market last year. So given the weak base, we would see year-on-year growth for the whole chemical sector on the back of export recovery and demand pickup in some segments. So we are seeing the demand improvement in performance chemical side, like more of pigments, polymers, paint, adhesives, and oil and gas chemicals. However, sequentially, performance is going to be a mixed bag as Q4 is seasonally a strong quarter for chemical companies. So we expect few companies like Atul, Aarti, Sudarshan would show some sequential growth supported by demand pickup in the discretionary segment. So on conclusion, year-on-year growth would be strong. However, sequential performance would be mixed bag and company specific.
All right. Hi, Bhavna. Good morning and good to see you in. This is Nigel on this side. I wanted your take on UPL. You know, that's been a bit of an underperformer in comparison to the other stocks. Valuation-wise, there is some support. I'm not sure whether you'll have official coverage on that one. But post its exclusion from the Nifty, the stock actually has done quite well.
Yeah, so on the UPL side, so we are expecting that the demand in the domestic crop protection side would be better as compared to last year's, and the monsoon is going to be good. But however, having said that, the situation in the global agrochemical market is still challenging and headwinds are there. There is this destocking situation is currently going, pricing pressure is there. So might be there would be some more quarters to gain more recovery in the segment.
Okay, all right. Also, what are your top picks? I believe PI Industries, which has been a rank outperformer, they have done some inorganic growth as well. That's one of your top buy picks. Tell us more about that. Valuations are not very cheap, so I ask you.
Yeah, so as compared to if we see other companies, yes, the valuation looks fairly priced, and there is no been major correction on the sharp correction for various names in the sector looks fairly priced on the expectation. But yes, PI Industries has delivered better in the challenging time, and we expect that the company has the growth story and the sector and the company would perform better in the going ahead. So yes, we are bullish on the PI Industries.
Okay, you're bullish on PI Industries. Any stocks that you feel that, of course, valuations across the sector are at elevated levels, but any stocks where you have certain discomfort because of valuations alone?
Yeah, so if we see that Naveen, SRF, they are trading more than 35-40 times of multiple, and the recovery is prolonged. So we are expecting that the recovery would be majorly seen in the second half of the year, and which is going to be majorly driven by the agrochemical recovery. And the China situation, we currently not know that how they are going to pan out this season. So these are the factors. Yes, so SRF. Naveen, there would be some challenges considering the major mix of the agrochemical side. And they have more of the generic products.
Got it, got it. Okay. Well, we will let you go on that note. Thanks a lot for joining in. That's Bhawana Israni tracking the chemical sector. But let's